As I'm speaking to you, the crypto market is crashing, and it's not the only one. All the markets are crashing right now. We're talking about Bitcoin at $84,392, down 5.34%. We have Nvidia, the AI leader, down 2.03%. And the S&P 500 is down 1.18%. So it's not just the crypto market, but the crypto market is taking the hardest hit. We can see it here. But before we talk about the specific reason that caused this 5.6% drop just now, let's take a moment to look back at what happened. By the way, if you want to access the news and see what's happening first and in text form, you can find all the information from this daily update summarized very simply on the Kojo app. But what exactly caused what happened today? We'll talk more about this at the end of the video, but actually it's kind of this strange mix because what happened yesterday. By the way, there were a lot of you on the live stream. I'll direct you to the live at the end because it's very interesting and I reveal some information there. We'll come back to that. But the financial system is shifting and it's happening very quickly. Because yesterday, the Fed simply announced that it was stopping its key interest rates. And the dollar is also falling to historically low levels. And on the other hand, gold is skyrocketing in a way we haven't seen in decades. And in the middle of all this, what do we have? There may be a much more discrete historic signal. We'll come back to that. But to understand where the macro shock is coming from, let's start with the Fed's decision last night. Because the Fed has decided to pause, as I was saying, these rate cuts for the first time since July 2025. So their message is quite simple and pretty clear. Inflation remains somewhat high. So inflation remains somewhat elevated. So it's too soon, or at least still too high perhaps, to ease the pressure at the Fed's level. And there's an important detail. There are 2 members of the Fed's board. Remember, there are 12 plus 7 alternates. There are 2 board members who said, and who actually wanted, a 25 basis point rate cut. So this shows that even internally, cracks are starting to appear. And they also acknowledge that the labor market is stabilizing a bit. They reaffirm their goal, the 2% inflation target that they keep emphasizing. But above all, they stress one point, which is economic uncertainty. And that gives them the perfect justification, namely to maintain the pause for as long as necessary. And for the markets, the December cut was probably the last of the Powell era, which will end in May of this year, I remind you. But after the Fed, we remain in a risky asset mindset. And we'll see what he says a little bit. Red Alio, because you see, with gold, we're living through a pretty crazy time. Because the price shot up to $5,310 per ounce. Let's look at it in real time right here on the gold chart. What do we have? $5,254. So it has corrected slightly since yesterday, and it also, in quotes, benefited a little from the drop. But what does Red Alio tell us? So we're at a level for gold that has never been reached before. We're talking about more than a 23% increase in just 28 days. And basically, we're also talking about more than $1,000 gained in less than a month. And the historical comparison is pretty crazy because it took 5,600 years for gold to reach $1,000. And that was in 2008. Remember, if you were already born, personally I was, so we experienced it live, and it was right in the middle of the crisis. And now it just gained $1,000 in only 28 days. That reminds me of something. It reminds me of Bitcoin, which up until 2018 had gone up to $20,000. And it's funny because actually I had this little counter there that I gave to a little counter of subscribers on YouTube. And also, I had the price of Bitcoin. I don't know if you remember, a few years ago, I had that in the background and my son and this little sensor. Actually, it's not connected to the internet. I didn't put it on my new network, and my son actually took it and put it in his office. And it was displayed $20,000. Indeed, in fact, Bitcoin reached $20,000 in just 9 years of existence. And now we're talking about a Bitcoin at $90,000. And sometimes, in just a few days, it went from $20,000 to $69,000, $74,000, and then $126,000. So this reminds us of a certain story, maybe from the past, but we'll see that maybe it could happen again very soon. So yes, officially everything is fine. But this kind of move, meaning this sudden rise of the dollar, is typical of periods when confidence is crumbling and capital that is seeking a safe haven. And precisely, Ray Dalio just said something very significant, because for him, the monetary system itself is cracking. Not just the dollar, but all fiat currencies. And by the way, I mentioned it to you. in yesterday's live stream. But the reason, or rather the reasons, are simply that there is too much debt everywhere. We're talking about the United States, we're talking about Europe, we're talking about Japan, we're talking about China. No one escapes it, not a single country. And that's why central banks are starting to buy gold again. This didn't start today, it goes back to 2022. I talked about it in my videos on the BRICS, especially with China, which was buying gold massively. So historically, when trust in government currencies, which is based on confidence, drops, gold is the first safe haven. That's normal. And we can ask ourselves, what about Bitcoin in all this? Well, Ray Dalio says something interesting because, and this has been proven historically, we'll see it in a moment, Bitcoin comes after. Gold leads the way and crypto follows behind. So, what we're seeing with gold right now doesn't contradict the Bitcoin narrative. On the contrary, it prepares it. Gold, the asset of uncertainty. Bitcoin is not yet that store of value, very clearly. When we look at the markets crashing today, even gold isn't a store of value since it's correcting significantly. We're talking about 2.63 here, minus 142,000, very easily. But what's important to note now is that regulation is being put in place. That's why we have volatility. And that's why we have a lot of macro factors shaking things up a bit. Washington is making progress on a major issue. Today, at 10:30 a.m. Eastern Time, so right now, the Senate Agriculture Committee is voting on the famous crypto market structure bill. I've been telling you about it for a while now, for quite a few days. And if it goes through, and if it's then signed, so a lot of ifs, as you can see, it could reduce manipulation. And what we call wash trading, up to 70% according to some estimates. So, in other words, we would have a market that is much cleaner, much more transparent, and above all, much more institution-friendly, if I can put it that way. So, more favorable to institutions. And this is exactly the kind of thing that can really give the market a new boost. It will take time, of course, but it will happen. And we're also taking things up another notch, because next Monday the White House is holding a meeting. All the banks, all the crypto players will be at the same table to unlock the issue of market structure legislation. So that's still a major point of friction. And it's always the same thing. Everyone's interests, everyone's rewards, in short, all the vested interests. And rewards, especially regarding stablecoins, particularly in what's called the Clarity Act. So we have crypto players saying it's essential to stay competitive. And the banks, for their part, say that if it doesn't yield enough or if it yields too much, it will actually siphon off their deposits. So the White House is looking for a compromise between the two sides. And if a compromise is reached, we could finally have the regulatory clarity that we've been asking for and that the market has actually been waiting for quite a few years now. There's another political issue that's huge. That is, the Treasury says that Trump could appoint the new Fed chairman in about a week. By the way, that was a topic, a question that came up among the journalists yesterday during the conference we followed. There were thousands of you. Thank you for your trust. I was translating live, which was interesting. Naturally, this puts the market a bit on alert because, according to Polymarket, we have Rick Reed. By the way, I mentioned it to you. The famous CIO of BlackRock, who is pro-Bitcoin and even more pro-liquidity, is leading the polls. If an appointment really happens in the next few days, it could create a pretty massive psychological shift. Because in that case, we wouldn't be listening to the decisions or even the words anymore of Jerome Powell. So if we have a Fed president who is more pro-liquidity, that's exactly the kind of catalyst investors are watching for. And the next meeting after the election is on June 17th, so it will be interesting to follow that. We also find some institutional analyses because the Q1 2026 report from Coinbase plus Glassnode explains that Bitcoin is becoming more stable. That's what the institutions wanted. Less volatility. They also wanted it to be more macro-driven, meaning more focused on macroeconomic factors. So less leverage, more defensive and hedged positions, more liquidity present, but growing and much slower. In short, much less emotional, much more structural. So that's something I wanted to share, but we'll wrap up this macro section with an indicator that many people forget. It's the famous BTC to gold ratio. I wanted to bring that back to the table a bit. And historically, a bear market for this ratio lasts about 14 months. And right now, that's exactly where we are. The idea is very simple. Gold goes through a phase of euphoria. As always, And Bitcoin is waiting its turn, just waiting for a macro signal to regain dominance. And we're exactly at the 14-week mark, so we'll see how things play out in the coming days. Things are going to move, that's for sure. And yesterday, by the way, I was talking to you at the end of the live about altcoins. I referred you to the end of the live. You should go check it out. And the question is it really the right time to chase after the next one? Altcoin season, trying to spot the altcoin that's going to do a 20x like in previous cycles? For me, the answer is no. And apparently, we also have Vitalik Buterin, co-founder of Ethereum, who thinks exactly the same thing, because he issued a very direct warning, because he says that if crypto, and this ties back to the debate we had yesterday during the live, if crypto becomes 100% speculation and there is no real utility, no adoption, and without concrete products, without real utility, then this industry will die. That's the reality. So it's a harsh reminder, but an essential one. In other words, the survival of the market, and especially its next real bull run, no longer depends on the altcoin lottery, but on what actually creates value. And value means usage, technology, fundamentals, infrastructure, and the projects that keep building while everyone else is panicking. And I talk about all of this in the live session that I'll link for you at the end. We're going to discuss it. But before that, let's talk a bit about why the market reacted at the time I'm recording this video. It's just before its release, and we're going to take a look at how it's behaving. We're at 80-14,642, so we had this liquidation candle. After digging a bit with my team, to me, there isn't any real bad news. If I deduce, we had a technical support level that didn't hold, so a series of liquidations followed, because there are several concerns weighing on the market. There's also a geopolitical concern with the tensions between the United States and Iran, which I talk about right here. And on the macro level, we have a pause in interest rates, let me remind you, which doesn't help. So there's also fear of another shutdown. And we know the repercussions that had. We're talking about a shutdown that could start tomorrow or the day after, even if it's less likely than what yesterday's poll suggested. But there's still that possibility. There's also a minor impact, but the Bitcoin hash rate also dropped sharply. So it's a bit of everything. So as I told you, if you want to watch yesterday's live, there really isn't any explanation. But if you want to watch yesterday's live, there's a lot of information in it that I shared with you. And we also had quite a few laughs. I was in good shape, so go check it out. It's right there. Above all, go watch the beginning because it's super interesting. Leave me a little comment as usual, and I'll see you on the live right away. Bye-bye.